So extremely wayward at this point in time. We will, I think, revisit in a bit. Let's invite Siddarth Bhamre of Angel Broking also into the conversation. Siddarth, what is the first Nifty, what is your Nifty trade today?
Good morning, Leda. We are clearly suggesting not to short this market. Whatever might be the reason for that last 1 hour fall and global markets are negative, we have already reacted negatively, and probably some more reaction in gap down of say 40, 50, 60 points, whatever SGX is suggesting. From data perspective, from liquidity perspective, there are no signs which suggest that that DIs or FIs, any of them are shorting. In fact, throughout this beginning of Feb series, we have seen that FIs are accumulating call options. So this put call ratio of 0.79 is not because somebody is selling call option. Yesterday also, if you see 7,500, 7,600 call options adding significant amount of open interest. Putting all this together, and where dollar is showing weakness and FI liquidity is not moving out as fast it should be, the way prices are correcting, I don't think so. We are in a market where you will see big crashes. At the same time, there might be slight disappointment to all the traders that Nifty would probably open at 7350, but if it closes today above 7350, then I think a lot of people will take solace out of it and would trade with positive bias. So from our desk, it is clear indication that we are not shorting Nifty. We would be stock specific. There are a lot of other trades which can be generated, but don't short Nifty at this point of time.
Okay, so don't short Nifty. Keep an eye out on the IT space, by the way. All IT stocks are under pressure in pre-opening. Infosys, TCS, Tech Mahindra. As we told you, the Cognizant management has come out with weak guidance for calendar year 2016 and for the next quarter. The next quarter guidance is minus 1.6 to 0.2% growth. So that's what they expect, measly growth, and that's reflecting on the entire sector. But Shubham Agarwal is also with us. Shubham, a couple of stocks that you have picked out. One of the stocks that has been hitting new highs post its earnings is Marico. You like that stock today?
Yes, so if you look at the chart, the consolidation that was there for quite some time, and that was the mean reverting band that we saw in Marico. Yesterday we did see a breakout happening from this overall zone, and that is giving us more confidence that in the near term we'll see higher highs getting reported. So I think it's very uncorrelated to what is happening to the market as a whole, and the momentum should continue there. So we are expecting a target of 260 with a time frame of about a month, and a stop loss for the same can be kept at 220.
Okay, so there are actually contrary views coming in from Siddarth and Shubham on the one hand, not expecting too much by way of scope for short trades, but Rajat and Prakash telling us that there is scope for short trades. But Shubham, before we let you go, you have a couple of sell or short ideas as well. Take us through Just Dial and DHFL.
Yes, so Just Dial, from a long time we have been bearish there, and we revise our target on the downside. So the important levels on the long-term chart has already been breached and the downside remains open. So with the formation of a continuation pattern on the daily chart, we expect that the next target for the stock should be around 450, and a stop loss for this trade can be kept at 575. The second sell is on DHFL, where 187 was a very important support, from where a breakdown happened and then a small consolidation has taken place, from where yesterday it has closed below the lower end of the band. So I think the overall view remains down, and 150 is what we expect with a stop loss at 188.
Alright, Shubham, we'll let you go on that note. Thanks for joining us. So those are a couple of picks coming in from Motilal Oswal. But Prakash Diwan, I wanted to discuss some of these mid-cap stocks that are in a pronounced bear market. Inox Wind is one of them. Yep. That stock has halved since its listing, and the earnings that came out yesterday have also sort of slowed down quite a bit. This was one of the most loved listings of last year. What would you do now?
So very clearly, all these stocks that get listed, by the time you have a mature price discovery equilibrium found, it's almost about a year that we've seen that happens. And then some of these very fancy names, right from Interglobe to the modest ones like Inox Wind that you named, they've always kind of had confusion about what kind of trajectory of growth they'll give in the future. So one is that you get listed, you don't have a history, there's no technical analysis people can do in terms of level levels, and the buying interest in these markets is going to be, Sonia, very limited for names which don't have a history. So people are going with companies with track record, and very clearly that's the only way you could. Scarcity of money is going to back things up. So the likes of Inox Wind, even VRL Logistics, I mean, it had a fanciful listing, did well, and then kind of languished. So all of them are going to go through this phase till there's a little bit of retail interest that comes up, and people look for more and more names all the time. Right now, if you're being picky, Inox Wind doesn't even stand a chance to be in that list. Though it's a great business, good sector to be in, everything's right, but it doesn't tick all the boxes as yet. So I think we'll have to stay away from these mid caps. People who are stuck probably need to kind of live through that pain for a little longer, but maybe the budget could bring out something positive for the renewables, but that's specifically for but a lot of these mid caps people will have to just kind of bear that pain through.
Okay. Yes, especially if numbers don't match expectations, it's going to be definitely painful. Let's finish the trading strategies with our chart experts, and then we are coming back to you for more questions. Rajat, among your other stocks, okay, you have some buys. So let me just cheer up the mood. Reliance is a buy, and in the mid caps, Exide is a buy.
Yeah, Reliance is a buy for the simple reason that Reliance is coming to test its 200 exponential moving average, which is around say 950 or so. So I've kept a stop loss at 948.20, and if index management takes place, if the bulls have indicated, then 995 could be the target for Reliance in today's session, and Reliance can really do remarkably well in managing the Nifty. And Exide Industries, yesterday there was a price volume breakout in this. I've kept a very small stop loss of 124.50, which is about 2.35 points to about from the last closing price, and Exide can move up to something like 129 to about 132. 132 is the day's final target, and that's what I've kept. But if the sentiment turns negative, Exide is not the stock to remain long in. So that is the caveat that I would like to share with your viewers.
Fair point. Well, Prakash, your Dewan Housing Finance is a sell like it was for Shubham. Your ITC is a sell like it was for Rajat. So let me take your other two stocks where you have given us sell calls, NTPC and United Phosphorus.
Yes, NTPC certainly is looking weak to me. I don't like the structure. It looks like it can slide down to levels closer to 115. I would have a stop above 126 and trade short. It's basically a weak structure and it's broken down. As far as UPL is concerned, United Phosphorus also is looking weak. Yesterday's move was very saying that it typically is sideways into a down move. So I think it's heading down to maybe levels, I would say, closer to around 390. I would have a stop about 412 on United Phosphorus and trade short.
Okay, this is looking quite ugly actually. The pre-opening rates have settled down of more than 1%, and it seems like that 70 to 40 level could be here even in today's trading session. Big losses coming in on the PSU banks this morning, PNB, SBI, even ICICI Bank, Bank of Baroda, Infosys. So it looks like an across the board sell-off. By the way, the Dow Jones futures are also indicating an ugly start there. So down about 0.7% for the Dow futures. Well, these are those days where we start looking at the Dow futures very early in the morning because we're so scared about what the latter half of the trading session could bring about, but not looking good at all.
Seriously doubt the amount of volumes that would be leading to this kind of fall in the Dow futures.
No, but it's still a trend that it's still
I think it's a little exaggerating. This is the Nikkei is the one that's really hitting home the kind of weakness in global markets. Well, we are clinging on to what Siddarth Bhamre is saying, that we perhaps had presaged part of that fall yesterday in the manner in which we fell in the last hour. But let's wait and see where support comes. As you point out, the indices are opening in very bad terrain. It's 7304 almost for the Nifty. That's down 1.2%. Commodities, banks, IT, all three legs of the market are letting it down. So, how much can you expect a Reliance and a Tata Motors to help? At the moment, they are also in the red, but let's wait and see if good news or technicals can pull up those stocks. Well, let's do one thing. We'll quickly give you some more trading ideas in our segment Super 6 and then come back for more advice from our experts.
Okay, well, those are some trading ideas in what promises to be quite a tough day of trade. But let's get back to our guests now. Prakash, you know, the entire, Prakash Diwan, the entire IT space is under pressure today.
Yeah.
What did you make of Cognizant's guidance? I mean, for the first time in very long, we're hearing Cognizant talk about weakness in banking projects, you know, pushbacks in spending, etc. Do you think this year is going to be a slow growth year for the industry as a whole?
No, it seems like, I think, you know, and Cognizant has always been the flag bearer of sorts to kind of set the tone and texture for earnings going forward. Every time they have, you know, raised earnings, we've seen upbeat mood of sorts for the rest of our companies. So this time, of course, it's going to be likewise. And another important thing that they very clearly mentioned, you know, that the margins, which have been very, you know, mouth-watering as compared to our businesses, is that getting into this year, if you read between the lines, getting FY16 or calendar 16 is an election year, and there are lots of populist stroke softer measures that are going to happen. Companies are not willing to spend much unless there's clarity from the new government that comes in terms of, you know, what's going to help them. There's going to be absolutely no spending for the first half. So that takes away, you know, 2 quarters, which is really sad, and that's exactly what. So anecdotally also every 5 years we've seen that happen. And then
the way the bank stocks have gotten knocked, you should expect that the BFSI segment is not going to
do well. And energy is not helping, retail is not helping. So there are a lot of these, except for health, I think there's nothing to really look for, and they're not very big there yet. Okay. So I think we'll have certain implications on the kind of models that we also have. So the likes of HCL Tech and FI, we are very aggressive in getting into new markets and newer contracts will get impacted.
Okay, we'll just come back to you, Prakash, for the other numbers, some of which did well, like PTC India Financial that you were pointing out. We had some other good numbers as well. But for the moment, the markets are all set to open with a 1% downtick. So let's just concentrate on what can commodities, banks and IT look like will have a weak start. There goes the bell, and it's below 7,300, 7287, 1.4 down. No, I wasn't quite prepared for that. I thought 7.3 will hold at least. 336 knocked off the Sensex, and that's below the 24,000 mark. 23,955. These are initial knee-jerk reactions. Let's wait for the market to settle down. This looks like fairly big panic, and Bank Nifty is taking it on the chin. Yesterday it stood out, losing half of what the Nifty lost. Nifty lost 1.4 yesterday, the Bank Nifty lost 0.75. Today it's almost making up for it in a hurry. It's down 2% at this juncture. And tall boys like ICICI Bank are taking it on the chin. Actually, nothing is spared. Is it a 50 on 50 in the red? No, not quite. There are the odd HULs and Sun Pharmas and Bajaj Auto that are doing well. But we have to tell you the bad news first, because there's so much bad news. Infosys is leading the pack, down 4.5. That was the one where people were making gains, and they have creamed it in one shot, it looks like. Then come the commodities and the banks. Vedanta down 3.6, ICICI down 3%, Kane down 3 point something. TCS again, like Infosys, down over 3%, almost 3%. Now come the other banks. PNB down 2.9, and as if you don't want to spare anybody, Maruti also, as Anuj Bond does, would be down. That's down 2.7. That's the easy shot, as he called it. Then come the others. Bank of Baroda down 2.5, SBI down 2.5, Hindalco down 2.5, Axis down 2.2, Tata Motors, good numbers actually in JLR sales numbers. It is down 1.8, that stock. HCL Tech 1.7 down, Wipro 1.8 down, Tech Mahindra 1.5 down, Z down 1.4. Tall HDFC Bank down 1%, Kotak Mahindra down 0.6. So, you know, if you're a better stock, you fall less, but you fall nevertheless. What's in the green? About 3 or 4. So it's actually 45 out of 50 almost. That's in the red for the Nifty. Well, I may say 44 if you please. The green ones, GAIL, Grasim, Sun Pharma, Power Grid, Ultratech, BPCL. Now joined by Bajaj Auto and BPCL as well. That's it in terms of green. Asian Paints, dibbly dobbly. Hero Motor again flat, but really this is well more than 85% of the market in the red.
Oh yes, not a good opening at all. Look at the market breadth, 1:9 in favor of the declines, and the two levels to watch now. On the Nifty, the 7240 level, of course, which is the January low, and on the Bank Nifty, the 14,754 level, which is the 52-week low on the Bank Nifty. We are hardly away from that, you know, about 50-60 points or so. 14,750 is the level to watch out for. In terms of stocks on the downside, a lot of weak earnings. Gujarat Gas reported a very weak set of numbers this time, so that stock is getting pounded this morning, down about 6.5%. Hitachi Home, SRF, Bombay Dyeing, Repco Home, all of these stocks are down in the red on the back of disappointing numbers and slower growth. Monsanto, where the margins have contracted, and some of the perennial losers include names like Just Dial, etc. That stock too has hit a new low today. It's down almost about 4%. On the upside though, take a look at Atul Auto. Good numbers coming in over there, so that stock is in the green. PTC India Financial is holding up quite well this morning on the back of good numbers. Pokarna reported a good set of numbers as well. Narayan Ridilya also, the numbers were quite good this time around, so that stock should also come up for you, up about 1.5%. But not looking good at all for the market. In fact, the start is well in the red. Anuj is also with us. Anuj, 320 points gone on the Sensex straight off the back. Not surprising.
Not surprising, but I tell you something, sometimes, this is better than, having a 20 or 30 point fall and then, seeing intraday decline. Because what this does is that for someone who would have taken short yesterday at 3 o'clock, is now sitting on 200 point nifty gains, and there would be temptation to buy or buy it back and cover. So not short covering, but purely the impact of booking your profit in short positions could take the market a bit higher, or could see a bit of lead to a bit of a recovery. For the bank nifty, we hit a low of 14,860. First tick was 14,860. So you defended the 52-week low by skin of your teeth. 6 points only on the bank nifty. So the trade now is to see how the market goes till 10 a.m. Both for the Nifty and Bank Nifty. At what point does the market bottom out, and then see if there's a chance of intraday reversal. Then of course key issue to watch out for would be what happens to Europe and Dow futures, because after such a fall there's always a likelihood of seeing a bit of a relief rally in some of these markets. So it's even shorting is not going to be an easy trade in this market. You really have to take a positional short, otherwise there would be 60-80 point intraday rally as well that could take place. And again, focus on individual stocks. Just Dial, for example, it has broken its issue price. Maruti is trading about 2% lower. Infosys, TCS, all these stocks are trading lower, but I won't be surprised to see one attempt of recovery at some point during the day, purely based on the fact that the global markets look extremely oversold.
Prakash, your thoughts?
I think very clearly people, we're going by what the Dow does and then what Nikkei does. So it's a serial, cascade of sorts that keeps on happening. And given the fact that all the positive triggers are over and earnings season is probably, we've been a mixed bag at best. There's really nothing much to look forward to. So we will kind of behave in this way. And the bears are completely in control given the kind of tepid buying that's happening. Yesterday's numbers, if you look at, was not so bad. FIs didn't sell so much on a net level, whereas the DIs actually bought much more. But it's the bears in the market that very clearly, have a firm grip, and this is going to happen. As Anuj said very clearly, technically, this kind of a start only makes some sort of headroom for moving upwards. So if during the day things look up, it would probably be a little bit of a diluted fall from what we've seen in the beginning.
Okay,
right,
so well, there is a little bit of a short covering already, but not a whole lot at all. It is still one quarter percentage points down for the Sensex and the Nifty, and the Bank Nifty down 1.5 even as we speak. Siddarth, you were constructive on the Nifty at 729495. What would you advise by way of protection?
So I would suggest to buy Nifty futures, because calls would be a bit expensive. IVs yesterday was around 18.5, 19 for calls. Might have jumped, I've not seen, but might have jumped above 20. And I'm not expecting a big downside in market from current levels. In fact, one of the strategy which we have suggested today, or we have suggested to our clients, is buy Nifty Bank and sell Nifty IT. And clearly, if you look from gap down opening, we are clearly seeing that Nifty Bank is rebounding, but Nifty IT is not rebounding. And I think that trade is still valid. So there are these kind of strategies. I would be more constructive after this gap down, 100 points gap down opening in Nifty. Clearly not shorting, and though we don't suggest intraday, but at this point of time, even from intraday perspective, Nifty looks a buy.
Okay, Nifty Bank is not recovering now. At the moment, it is still weak at 1.4% lower.
Well, I just want to point out that Suzuki Motors is down almost about 7.5% on the Nikkei index, and when they came out with their numbers yesterday, they went ahead and cut their annual net profit outlook by about 4% to 120 billion yen, saying that a planned cut in the corporate tax rate will affect its calculation for deferred tax assets. This will of course not have any impact on Maruti Suzuki, the listed company here, but Suzuki, the parent company, has gone ahead and cut their net profit outlook by about 4%. That's just putting it on the table. Prakash,
Suzuki is actually down because Maruti is
exactly,
down. Sometimes we make this mistake of pointing out what's happening globally. This is one
of their largest and profit-making subsidiaries.
Maruti's market cap is more than Suzuki's market cap, and it's almost like just because you have a stake in a large company overseas, and that stock has fallen so much, and that's why Suzuki stock is down. It's a cause and effect relationship right now. The cause is the Maruti stock, and the Suzuki stock is not the cause for the Maruti stock to go down. Maruti stock going down is the cause for Suzuki stock to go down.
I take your point. I'm just putting it out.
I'm telling for our ticker team to put this thing in perspective. The bigger news is Maruti falling, not Suzuki falling. That's
and then of course the yen strengthening is also not going to be going to help the local stock any further. Well, Prakash, any advice in terms of safe harbor? All those little stocks, the PTC India Financial, the Pokarnas, the TV Todays, will you seek harbor in any of these?
No, so some of these which have consistently been delivering good numbers, and we've seen good earnings have been rewarded, or at least not been punished. They've been kind of people have been indifferent towards this. So we were talking about PNG Health. Very clearly, the kind of leadership that they've attained, double-digit growth in healthcare and the feminine hygiene segment. In the last 24 quarters, they've actually reported on the highest EBITDAs. It's actually at 30% plus the EBITDA margin. I mean, you don't have a large business in the FMCG space with such kind of, numbers. The EBITDA has grown 68% in the, 6 months. They have a June end, so for them, December was the 6 months. Currently it's valued at about 37-38 times. Historically it's been in the 45 times listing. So you still have headroom. It's not kind of over the board or something. But my sense is these are companies that you need to put on your radar. Don't get misled by other names when things look down. Pick these up when the valuations are low. Same thing is on PTC Financial. PTC is doing so well. It's still close to its 52-week lows, and the kind of margin that it operates on are phenomenal. I mean, actually on a gross margin basis, it's about 70%. I mean, which is ridiculous if you look at private sector companies. But because it has the advantage of a monopoly of sorts, it's across the value chain. And what they've done is they've changed the client mix, which is very important. They're no more dependent on PSUs. They are kind of getting into much more smaller, diversified kind of industrial segments to supply, their products, the financial products. I think you can't ignore these kind of companies. 110% in 9 months of profit growth, 58% top line growth. So stick to these good names. We will come back with a small cap, mid cap when the time is right. Yes. But right now, I think it's best to stick to safety than anything else.
Also, I want to point out that Narayana Health, this is the first quarter after its listing that it has reported, and it's reported a very good set of numbers. So the revenues have gone up by almost 20% for the company. The margins have improved to 11% versus 6% earlier, and the profits, it has reported a profit of 4 crores versus a loss of 14 crores earlier. Quick thoughts on this?
So this was indicated by the management that they were just at the cusp of this thing, given the fact that a couple of new facilities were triggering it. And importantly, what this does is the stock may not rally from here on, but it protects the downside significantly, because the listing was much beyond what people expected, and given the tough times it has come into, so I think this 320, 325 band is a decent threshold, and we've seen some large blocks also happen yesterday in the counter, which means there is buying interest that continues with this. So, which is not the case for all listings. So, thankfully, people are able to now differentiate with quality. You look at yesterday's precision camshaft, and quality speaks for itself. So, that's the best. You're not kind of getting into a wave of sorts just because everything's doing well.
Okay. Well, for the moment, you will have to say that the market was called right by Siddarth, by the dip, he said, and the markets have recovered from the day's lows. So, from the first 15-minute lows, the markets have shown about a 0.5% recovery, or at least a 0.4% recovery above the 24,000 mark now. The Sensex up at 24,000. 35. The Nifty as well has clambered above that 7,300 mark. If you remember, we saw 7,280 levels. So it's actually a good 30 points that the market has recovered from its lows. The Bank Nifty as well has climbed closer to that 14,900 mark. It was threatening to cut 14,820 I think was the low. So there is a bit of short covering that we are seeing in early morning trade, but we will have to see whether the lows of the morning will be protected up until 10 o'clock. Until then, you're not going to get really too many people who will want to buy the dips. Let me get our chart experts on what the strategies should be on the IT space. Rajat, HCL Tech, TCS, Infosys, strategy on any of them?
See, it's not just HCL Tech or it's not just Infi. I would give you a strategy. How do you play these gap down opens and after that expecting a recovery rally? You first note where is the open of a particular stock, and then you look at the low, and then you look at the recent high, I mean the last few minutes high. If the stock is very close to its high, wait for it to cross this high again, and then you buy, putting a stop that the maximum stretchable stop would be the day's low, and go long, betting on a recovery. That way some stocks actually stood out, like say Siddarth Tires or the cement pack, ACC or Ambuja, even for that matter, I would say stocks like CESC or Cipla, these are stocks showing some bit of movement on the positive side. But all you need to do is that most cases you will find open and low are the same, and if this low is violated, then definitely you are not in it anymore, because it was just a short covering rally and it has fizzled out. From that point of view, you can even bet on the Nifty. So you have a choice. You can bet Siddarth, you can bet ACC, you can bet on the index. This is how you play this kind of gap downs. And one thing I concur with Siddarth, there's or even Anuj for that matter, that this 100-point gap downs are far better, because this has given much better recovery rallies. And one more thing will happen if we were to get a rally, assuming that we would get one. If we were to get a rally and if we close around yesterday's close, that was say 100 point from or 90 point from the current level or so, then this would be a reversal with a positive divergence signal on the technical charts, end of day technical charts, and that could actually give another fillip to climb back once again. But if that doesn't happen, then you are actually saddled with much more weakness. But I would closely watch Bank Nifty, because I'm not too hopeful about that.
Okay, well, on that note, let's thank Prakash Diwan for joining us, and I request Prakash Gaba and Rajat to stay on just a tad bit more. By the way, I wanted to point out that some of these gold ETFs are doing really well today. Yesterday we had reported that gold, MCX gold has now hit a one-year high of 27,700 rupees per 10 grams.
For the markets, well, it's actually still a sell on any little bit of rally that we are seeing at this point in time. So this Nifty is back down below that 7,300 mark.
Oh yes, and Just Dial is really the talking point right now. It is below its issue price of 530 rupees. Forget about the listing price, but you know, it's even below the issue price, which was about 530 rupees. A new low on Just Dial. Similar is the case for many of these other listings, names like Inox Wind, etc., that have been hitting new lows and have halved. Inox Wind has halved from the listing day. So that's another stock to look at. Yes,
you've got some strategies, Prakash. You have Tech Mahindra now, that strategy?
Yeah, the technology is looking weak, and Tech Mahindra in particular has opened the gap down and has continued down. So there's a very good chance Tech Mahindra can slide down to levels closer to 450. Okay. Would have a stop about 466 straight short.
And the other one is Britannia, where you putting a buy.
It's a defensive buy, purely a defensive buy. If the up move continues, then maybe Britannia can climb to the levels closer to 2950, stop below 2850.
All right, we'll want to ask you about the various banking stocks as well. They continue to be in a very pained spot. Bank Nifty itself is down 1.3%, but we are going to get a string of managements joining us, so we will just hold by for that. Anything strikes
Yes, before that, Lata, I just want to point out that Tech Mahindra is now sitting at a new 52-week low today. So 456 on Tech Mahindra. It's down almost about 3% No recovery at all, and post the week numbers that the company posted, the stock is under pressure. But talking about IT, Geometric posted a very good set of numbers. Infosys is now down more than 4%. And I just want to get back to the point that Cognizant was making about a slowdown in healthcare spends. This is something that even Accenture spoke about earlier, a slowdown in healthcare spends. And this is, although it's a smaller part, a contribution to the sector, but it's been the pocket of strength for many of these companies like Infi, TCS, HCL Tech. So I guess there's a bit of adjustment happening after both Accenture and Cognizant have talked about a slowdown in spending in healthcare.
The other sectors are already weak. The big boy, BFSI, has already been indicated is going to be weak. We are not seeing so much from telecom, we are not seeing so much from retail, and therefore healthcare was something people were clinging to. If that's also being guided lower, it's certainly a bit of a problem. Rajat, I wanted to ask you if you have any suggestions on either the tech stocks, but more importantly banking. Any specific banks you want to play? You gave us HDFC Bank and Innocent Bank, but any more?
I would first take up the IT part of the question. There, what I found was that these stocks actually opened at the day's high and then started coming down. And Infosys already down by 4%, and it can actually taste its 200-day moving average at 1079. And I would suggest selling both Infi and HCL Tech at current levels. Say you put a stop loss above 1132, and targets are 1074 and 1067. I expect it to reach the 200-day moving average and go at least a percentage point down from that, and sell HCL Tech at current levels with a stop above 850 and targets 800. When you find a sector whose stocks actually open at the day's high and starts coming down while others are opening at the day's low and trying to push up, that means in the second phase there will be attack on these stocks, and that is what I am banking on. Based on that, these two sell recommendations. Now coming to the banking stocks, I find an interesting pattern here is that ICICI Bank, after languishing below its open around say 204, is steadily posting higher highs. I mean, if anybody is willing to bet on this, not on the day's low of 200 but very small trades, say you are buying around current levels with a stop below 203.80 and expecting 209 to about 210 on the upside for any kind of a short covering recovery, this is the kind of trade that you can take. But HDFC Bank and IndusInd, absolute no on the buy side, because they would be under attack today.
Right. Okay, well, just stay on. We'll take a short break on that note. For now, the market is still quiet, still down about 260 points, but off from the day's lows. Joining us on the other side will be our first market master for the day, Tushar Mahajan of Nomura, who will help us track the futures and options space.